You set your stop loss perfectly, or so you thought. Then, bam, volatility spikes, and your stop gets triggered only for the market to rocket in your original direction. The emotional roller coaster of stop-loss management isn't just frustrating. It's the silent killer of your best trades. But what if your stop-loss could think? What if it could adapt to the chaos? Tightening when momentum fades, loosening when the market breathes, and even reversing when the tide turns. Today, we're revealing a next-gen indicator designed to do exactly that. It's called the Statistical Trailing Stop, an adaptive, intelligent system that reshapes how you protect profits and reduce risk. And best of all, it's completely free. So let's break down how it works and why it could be a game changer for your trading strategy. Managing stop losses manually is one of the most inconsistent parts of trading. When the markets are calm, static stops might hold. But when volatility picks up, those same stops quickly become liabilities. They don't adapt. This disconnect leads to a common pattern where traders are setting their stops too tight or placing them too far and watching gains evaporate. The root problem isn't the strategy, it's the rigidity. That's where an adaptive solution becomes essential. A stop loss needs to evolve with market conditions, not just react, but respond intelligently to the current state of volatility. And this is an indicator designed with that principle in mind. Once added to your chart, the indicator immediately goes to work, drawing a real-time trailing line that adapts as the market moves. The indicator will be green during bullish trends and red during bearish ones. It automatically tightens or widens based on market conditions. A change in direction is triggered when price breaks the trail, allowing it to function as a full stop and reverse system where every move is visually tracked. As the market develops, a label is plotted at the start of the trend that shows the amount of profit that has been locked in. And once that move starts to be profitable, a shaded region appears highlighting gains that are accumulating, making trade progression and risk management instantly clear. And while the labels at the start of the trailing stops are great, we wanted to take it to the next level for traders who wanted deeper insights. Users can go into the settings of the indicator and enable Show Statistics to see a dashboard that will reveal everything under the hood. This allows you to track the historical performance of the trailing stop across assets, giving you metrics such as the total P&L for the asset you're viewing, allowing you to instantly know if the current settings are profitable on this asset. You'll also be able to see the win rate, average win, average loss, risk to reward ratio on both long setups and short setups, the expectancy, and so much more. At its core, the indicator calculates volatility using a smoothed average of true range, then applies standard deviation logic to dynamically determine the trailing distance. High volatility will result in a wider buffer, while low volatility will tighten the stop. But you may also control this behavior through 4 customizable levels within the settings of the indicator. Level 0 offers the most reactive trail, while Level 3 provides maximum breathing room. A cheat sheet for this can be to always use Level 0 or 1 for fast-moving assets or lower timeframes, and higher levels for slower markets and higher timeframes. This adaptability makes this indicator suitable for almost any asset on any time frame. As always, no indicator is a crystal ball, and the Statistical Trailing Stop is no exception. It's a powerful tool, but it should be used alongside your own analysis for the best results. No matter your trading style, one thing remains true. Every position should be protected with a stop loss. By integrating the Statistical Trailing Stop at the entry stage, you can enable the built-in dashboard to instantly view how the current stop settings have performed historically. This allows you to tweak your settings in real time, optimizing the trailing stop before you even enter the trade. Instead of relying on a fixed ATR-based stop or a guess, you're now making data-backed decisions, aligning your exits with actual market behavior and improving your overall timing. Before entering a trade, take a moment to analyze the previous trailing stop lines on the chart. If you're seeing multiple stop lines without any shaded fill areas, that indicates those trades would have closed at a loss. In this scenario, the market likely isn't trending clearly, suggesting that current conditions may be too choppy or uncertain to justify a position. Now compare that to this other example. Here, you'll notice that most trailing stops eventually generate shaded areas. This signals that trades are progressing past the previous stop level, evidence of a trending market. That's a key confirmation. In such conditions, you can also cross-reference the win rate using the statistics dashboard. If it's above 50%, this adds further validation. From here, one strategic approach is to wait for the trailing stop to move into profit territory. Then, use a secondary confirmation to time your entry. Once in the trade, simply use the Statistical Trailing Stop as your active stop loss and hold the position until you're stopped out. Clean, data-backed and methodical. You can start using it right now, completely free, at luxalgo.com/library. Thanks for watching. If you found this helpful, give it a like or share it with another trader who'd benefit. Until next time, trade smart, and we'll see you in the next one.